Negative interest rates. this. All right, so what do negative interest rates mean? It simply means that is the way to get you not to save, to consume. Because deflation is truly an enemy we are not prepared for. Negative interest rates just say at the end of the day, we want to punish savers and reward spenders. That's what it is. Like it or love it, doesn't matter, hate it. That's what negative interest rates are. They say we need you to get out of your money. Along the times, you can actually see where this is going too. With negative interest rates also comes what? Well, it comes a more focus on a cashless society. They don't want you hoarding cash, and they're going to punish you for hoarding cash. This is scary stuff, my friends. I'm not trying to be one of these freaking, who's the guy out there in Canada? I forgot his name, but there's a lot of people pushing out these crazy things. The economy is going to collapse. No, I don't want a cashless society because that simply means it's more easy to track you and your expenditures. We don't want that. But that's how they get you to basically punish you for saving. Why do you think FDR made it illegal to hold gold in the 1930s? They didn't want you hoarding stuff. They wanted you consuming. That's what brings inflation, is consumption. 70% of the GDP is all consumption from consumers. You and I, just spending stuff. That's what GDP is based on, significantly. You and I spending. If you're holding cash, all right, and now one of the reasons there might be negative interest rates is simply because the savings rate in March, I don't think that's enough to say there's any kind of structure there behind that yet. It's not just 1 month in of itself doesn't mean it's a indication of huge savings relative to spending like we see in Japan. But anyway, so negative interest rates, what that feeds on, it just simply, I mean, all this does is perpetuates the concern about deflation. And we can see negative interest rates in Japan years and years and years and years, no inflation, negative interest rates. And thus they were punishing people for saving. And what do people do? They still save because they say, hey, look, I might lose 0.1% each and every year on my savings in a 10-year bond. Well, at least I am not losing everything. At least I still have access to that. And so it might be worth $1,000, might be worth $990 next year, but certainly better than being worth $500 because of hyperinflation, or certainly better than putting the market in the Nikkei and getting hammered, being down 50% because of market decline. That's what negative interest rates do. They tell people, look, you better be worried about inflation. About negative interest rates, deflation. And then when the minute people hear that, they start hoarding. This isn't rocket science, man. It's not even nefarious. It's just saying we want you to get out of your assets and we want you to spend it to increase inflation. Inflation is how we get growth. Inflation is what we're all focused on. Without inflation, no one knows what the hell to do. And that can perpetuate itself for years and years and years, like we've seen in Japan. A guy had emailed me, actually, a book Paul Krugman had written back in 2008, I believe. And one of the chapters was talking about the Japanese recession and deflation. And I thought Krugman was spot on when he talked about it. And it was pretty interesting. I can't remember the name of the book. I'm not a fan of Krugman, but he was spot on. He said, it looks like Japan is starting to come back to inflation. But he said, we'll see how that shakes out. And of course, that was in 2008. Fast forward 13 years. Japan is still not growing, no inflation, still negative interest rates. All negative interest rates do is they reward you who spend and punish you who save. But the punishment is not enough to keep you from saving your money. That's the issue. The punishment is just a little nick every year, 10 basis points, 3 basis points, 20 basis points. It's not much. Once it starts getting big, 100 basis points, that's bad. That's bad. That means you're losing 1% each year just for keeping your money in the bank. So if you see some serious negative interest rates, along with this cashless society, things have gone bad. Trust me. So keep your eye on that. A couple basis points of negative interest rates doesn't mean anything. It's just no big deal. That can change overnight, which it already has. It's the big hit where the government is mandating when they sell bonds, we're going to issue this bond at 100 and we're going to pay you back 90 10 years from now. That's when things start getting pretty scary. Right now it's not there, not even close. I can't imagine Trump would even do something like that. Now, I know Trump doesn't control the Federal Reserve Board. Yeah, if you think they're not political at the feds, I got a Brooklyn Bridge to sell you for $1. So just remember, if you start seeing significant negative interest rates on long-term, when I say long-term, 10-year treasury bond, and more talk about a cashless society, that's when you gotta start getting scared. Not there yet. All right, we'll see you.